Per usual, everything else just for educational purposes only is not intended as financial advice. It's Macro Monday. Let's take a look at some legacy crypto flows from James at CoinShares here. Week over week, we've been declining. We're still very positive. ETH flows were actually negative on the week, at least in the US, slightly positive here. Globally, most of the flows coming into BTC, most of the flows coming into IBIT, coming in from the US. So broadly, it's pretty much just been an IBIT show and really nothing else over the past week. 30-day cumulative flows have flipped positive. That's what we want to see. We don't really want crazy inflows. We just want a steady stream of continuous flows. That's what we want to see. A lot of those IBIT flows probably being used to capture this funding ARB basis trade. OI is up a little bit. None of this stuff is worrying or concerning. We're pulling back a little bit today. On the BTC side, nothing really super significant to speak of. Upside targets haven't changed. Cycle thoughts haven't changed. Just measuring this out using fibs gives you a target 138 to 160. It's unlikely that we'll breach all-time highs again on the first attempt. We'll probably consolidate here for a little bit and then go again. Maybe June. I don't know, right? It feels like the best trades for the month are behind us. The easiest setups are behind us. And now it's probably just chop and consolidation. If we go on the 4 hour here on Kraken Pro, you can get yourself a Kraken Pro account with a link in the description of this video. Proud sponsor of this here YouTube channel. 4 hour rolling over a little bit. I don't really think there's anything to be too concerned about. Seeing meme coins 2x in a couple days, usually a good sign that we're due for a pullback anyway. Some mean reversion here on higher time frames. Ripple doing well today in the face of everything. Starting to look a little better. Still in the range. But again, there's nothing here high market caps that really looks set up ready to me other than Sol BTC. It's one of the best looking charts. It still hasn't moved against BTC. Inverted head and shoulders, edge to edge. There's some MSTR trades to think about. There's some maybe miner trades to think about. I don't know why miners would all of a sudden do well when BTC pulls back like this, but there's stuff to do should you choose to do it. I think broadly, in general, probably going to be a nothing week this week. This is MSTR pulling back a little bit today. Much like BTC, look at this verticality, this just diagonal straight line. It's going to probably consolidate or need to consolidate a little bit, right? Maybe hold up at 400, but I don't have any good ideas here left in the near term on MSTR. WGMI, on the other hand, mining charts certainly look much better for setups and entries. Whether or not these setups will play out, I don't know. Whether or not we'll see this right shoulder here on WGMI, I don't know. But these would be some of the laggards that have yet to move, at least on the legacy side. Coin also looks excellent here. IHS edge to edge. So if you're still bullish alts, if you're bullish ETH, you're looking for laggards. I like Sol ecosystem, ETH ecosystem, things that haven't moved yet. I like coin. I like miners as far as a trade idea, just because they have a defined risk reward here. Stop loss is new lows, right shoulder. Target is fibs plus cloud. That's it. It's really that simple. Not much else to do here in the meantime. This week on the calendar, we do have CPI tomorrow, expected to come down month over month. And the rest of the week, a bunch of Fed speak, some other stuff that I don't really care too much about, but I'm sure the macro doomers are going to pick each of these apart and say the consumer's weak, housing is weak, manufacturing's weak, whatever, right? Okay, fine. Broadly, again, does this really matter? What matters the most, the single most important thing at this point for the Fed is not inflation, especially after the trade stuff that has cooled down. It is unemployment. I don't think they're going to move here on rates until unemployment spikes. If it spikes, and by the time it spikes, that probably means bearish things for crypto, bearish things for risk assets. So in a way, you don't want the Fed cutting because that signifies job market deterioration. Next meeting, 618, currently pricing in no cut. And that's unlikely to move unless unemployment at the end of this month shoots way up. So for now, rates are probably staying here. And it's not like Powell's going to say something magical next month that he didn't already say, waiting for tariff stuff to play out, waiting for uncertainty, waiting for the hard data to start to roll over. We're just not seeing it. Trueflation still sub 2%, still at 1.5 and change. CPI is going to take a while to roll over. Core is going to take a while to roll over. PCE is going to take a little bit while to roll over. But if this were soaring to 3 plus, 6 plus, then we'd have a problem. We're just not seeing it yet. It doesn't mean we won't. It doesn't mean the tariff stuff won't work its way into the data and we'll start to see crazy numbers here on trueflation. I just don't think it makes sense to panic until the most sensitive of inflation metrics starts to look hot. We're not seeing that yet. I even saw Bianco, of all people, say, oh man, look at this, trueflation's rising. It's calling for inflation to take off again. I don't know about that. What we are seeing potentially month over month is a jump in CPI. We're only 12 days into May. You can see across all the metrics here, the Fed's nowcast is rising month over month. We'll see. We'll see what this month is. We'll see what next month is. Is it up? Sure. Is it up a lot? Not really. And in the grand scheme of things, again, until this starts screaming, I'm personally not worried about it at all. GDP is back to positive 2% here on the Atlanta Fed's nowcast. They were the most accurate when you accounted for removing gold from the equation, those gold imports. So I'll stick to them for now. And this looks fine. Does not look recessionary. And if those estimates start to roll over, then I think it makes sense to get worried and concerned and mega risk off. I just don't think we're seeing that here. Reverse repo, another liquidity metric, still sitting down there at a casual 150 billion. Really not much going on here. Again, the Fed's unlikely to cut until they see liquidity problems, and we won't see liquidity problems probably until reverse repo is completely drained, and we just haven't seen that yet. So for now, we stand where we are. Here's unemployment rate there at 4.2. Again, this is historically very, very low. Even 5% would be historically very, very low. The issue is the uncontrolled rise. That's what they're trying to avoid. The yield curve is clearly positive. It clearly looks like we're setting ourselves up for a recession. We had a negative GDP for one quarter already, but nothing here is a slam dunk. And until we see unemployment spike, this specific number, again, you can look at the statewide level, you can look at all this soft data, you can look at all these layoffs, you can look at anything you want. But until this number moves, the Fed is not going to care. They just aren't. So we can guess and be doomer about it. And I see those numbers every day. 20,000 from here, 10,000 from there. Rite Aid closing, bankruptcies left and right. I get it. But it hasn't shown up here in the unemployment data. The bond complex across the board has gone south. This is maybe something to keep an eye on. These are the bond ETFs. 10-year yield back to 4.45. None of these on technicals look bullish. Even SHI, which had looked fairly bullish, has pulled back quite a bit back into the range. TLT almost back to lows. I mean, none of this stuff looks investable here to me at all. So if you like the yield, you like the yield. But from a TA perspective, this still favors risk assets to me. This still favors crypto to me over finding safety in high duration. You can still get a decent yield on a money market account. And you've even got HYG. Look at this beautiful inverted head and shoulders up here. Now the right shoulder is a bit stretched, admittedly. And this is a joke, of course. But it's back above the cloud, just like you'll see the indices are. And it's almost like nothing happened. We'll see if this can actually continue. But it's certainly set up for bullish continuation here. And this is a liquidity sign. This is a risk sign. This is correlated with BTC. So if this continues to push higher, crypto should continue to do well. DXY has reversed strongly from the bottom. This is probably why crypto isn't having a great day. Still in bearish territory. If this can consolidate and hold lows or break down, crypto should do well. Just as crypto's consolidating, trying not to break down into the lower 90s, right? So if DXY shoots up above 105, then I think it's easy to be more bearish BTC. But until then, we just wait for some consolidation and some mean reversion. This is probably the most bearish chart. And again, it's back to that idea. You either want it to be super bearish so that there's some intervention and something happens, or you want it to just be sub 4.25, sub 410. In this wishy-washy period, that's where there's the most uncertainty. On technicals, the yield looks ready to break out. You know, this looks like an inverted head and shoulders potentially, or a diamond bottom or something. This does not look like bearish continuation like it did back here with the head and shoulders. So just technicals on this and the bond ETFs both say, be careful with yields here. If these continue to rise, it's going to continue to hurt risk assets. I just saw today before I started recording that the new tax bill raises the debt ceiling by $4 trillion. So I don't think the bond people are going to be too happy with that. Oil continues to just sit at lows, maybe a lower time frame Adam and Eve down here, but I don't think this is tradable. I think it's great for inflation that this remains low. They were talking about refilling the SPR down here, which would make sense. But as long as this is bearish, inflation should be muted, mild, down, because this is a big component of CPI. Gold looks like a double top to me. Doesn't need to break down back to 2,500. But if you're trading this, the entry was beginning of the year, not here. Maybe you see a Kijun bounce at 3,200. I don't see a great reason to jump into gold here. Just doesn't really make sense to me. It's had a great run already. Maybe you like DCAing it. And this is also good for crypto, good for risk assets. BTC typically moves after gold moves. So if gold is breaking down, BTC should continue to shine. Looking at the SPY on the cloud. Bullish TK cross, price above cloud. You're going to get a bullish cloud here this week, probably. Maybe you get a right shoulder, maybe you don't. Maybe this consolidates, moves lower. Maybe it doesn't, but it certainly doesn't look bearish. Does not look like bearish continuation. Will we see all-time highs again this year? I wouldn't bet against it, just based on how the chart looks here. Now, obviously, this is probably going to fill the gap and cool off for a little period of time, but this chart does not look bearish at all. And the VIX is all the way down sub 20 again. So legacy can continue to party. And yes, you can have these ideas that capital's going home and foreigners are selling and there isn't enough passive money to keep multiples as high as they are. I get all that, but technicals would disagree with you. Technicals remain bullish up here. Here's the Qs. It's a huge move in a big risk on signal, and probably why BTC is pulling back as well. Some of that capital is sloshing back into equities versus crypto today. TQQQ 4-hour also bullish. It's hard to find a bearish chart in the mega caps for the US. For China, this is KWeb, a darling of yesteryear, hasn't gone anywhere in 6 months to a year. And that's the problem with this international stuff for me. Sometimes it just doesn't trade very well, technically. It still looks bullish, but how long are you going to wait and eat opportunity cost in something like this versus US or elsewhere internationally? MAGS, the MAG 7 ETF, looks great. Apple for the first time in a long time. This looks like a huge inverted head and shoulders to me. And again, you can have some opinion about AI and the iPhone and whatever else. I don't really care. All I'm looking at is the chart here. And this looks very good as a setup for a bottom, a tradable bottom with a push back to highs there. SMH also above the cloud, bullish TK cross. All this stuff is resetting. So this is what I like to see from a trend metric perspective. And it looks like bullish continuation is on deck here. NVIDIA back above the cloud after a falling wedge breakdown. The smoother ride legacy has and looks, the better chance crypto has of bullish continuation. So to see all this stuff printing and continuing to look bullish is a very bullish sign to me. XLU also as setup looks good. I think this is with the dividend adjustment on it, but utilities ETF also looks great from a setup perspective, defensive or not. It just looks good here. XLF financials back at highs, canceling this head and shoulder breakdown. So it's not just tech. It's not just one industry. It's a lot of stuff. This is KRE, regional banks back to the range. Not exactly tradable, but an interesting risk signal. Sub 47 and things are probably going to get ugly, but we're back at 60. So party on. Really not much to say here after a mega bounce like that. I think some of the best looking charts to me, regardless of tariffs, regardless of headlines, just based on technicals, Rivian has never been above a high time frame cloud, and it's starting to attempt to peak above the 3-day cloud. Maybe this is a gigantic falling wedge, maybe it isn't, but this looks great to me. Lyft as well, multi-year bottom, had a huge week last week. Kind of reminds me of Roblox, which has reached its target. The target on this is probably, we'll say 19 minus 9, so probably 30 plus on Lyft. And even Uber looks good. And maybe there's something to be said about this sector with AI, transportation. I don't know. You know, you could make some mix of the three. You could throw Tesla in there too if you want. But all those charts look really good for different reasons, sort of industry adjacent and immune a little bit from tariffs. So I think it is legacies week. I think crypto is going to slow down a little bit, and that's okay. We had a hot couple weeks. We were running hot since April. Makes sense to consolidate up here before we reattempt all-time highs on BTC. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.